homework was to finish problem 2-1, and so you needed to write the journal entries, and then you were to post those to their T accounts. So I think we left off with letter E. So on page 92, letter E, we paid cash for supplies for $2,100. So when you purchase an asset, we purchased supplies and we paid for these. So we debit the asset supplies and we credit the asset cash for $2,100. So we increased one asset and decreased another asset for $2,100. Letter F, we paid cash for the annual insurance policies. Okay, insurance policies we hadn't talked about yet. So when you looked at your list of options, hopefully you found one called prepaid insurance. So we were to debit prepaid insurance and credit the cash for $3,600. All right, so think about prepaid insurance. It is an asset.
You go beyond?
A 92, the problem, that your homework problem. And so prepaid insurance, it's an asset to you until you use it. So it's just like supplies. Supplies we buy as a group and then we use them gradually over time. So we put the supplies in letter E in the asset account, and we treat it as an asset until we use the supplies. The same thing with the prepaid insurance. It's an asset, and when we use the prepaid insurance, it becomes insurance expense. So on your T account for prepaid, since it is an asset, we put the $3,600 here, and then as we use it or the insurance expires, we lower that account by the amount of expired insurance. So when we purchase a policy, you're going to debit the account, and then as that insurance expires, you credit the account. So prepaid insurance is an asset until that policy expires, and then we'll adjust it for the amount that has expired. We'll treat prepaid rent the same way. If you pay rent in advance for, say, 3 months, then as that rent expires, as the months go by, then we'll lower the asset and turn it into rent expense. Okay? All right, so that's prepaid. So letter F. Next is letter G. Letter G, we received cash from the client for plans delivered, $9,000. So if we receive the cash, then we're going to debit cash. And they said from the client for plans delivered, what did you credit?
Accounts receivable.
Okay. Accounts receivable would be if the customers paid us for services on account. So these are services we performed right now and the customer paid us. So it's not a future receipt of money, it is we did the services and then they paid. So we're gonna debit cash and credit the fees that are professional fees. So we record the revenue because they paid us the $9,000. You need to post a Blackboard. Yeah, just take a picture of it and post it. And you can check it. The reason I do that is so that you can go over, you can check it as we go. All right, so the difference is the wording. If it had said we had received from clients payments on account, then it would have been accounts receivable. Yes.
So if you're labeling that, whereas you label it professional fee, you can label it anything as long as it accurately represents what it is. So
Yeah.
it doesn't have to be like, say, accounts receivable, not like same for this one, but just like it doesn't have to have a certain word, you just have to represent what it is.
Yes and no. So as long as I can tell it's a revenue account, so like if you'd said services revenue, fees revenue, even if you just simply put revenue, I would be okay. But if you put in that example, if you put accounts receivable, then that's a whole different category of accounts, because accounts receivable is an asset, this is revenue. So as long as I can tell that it was intended to be a revenue account, that I can make it go back to revenue, then it's fine. Like if you put sales revenue, I mean, that would be, or services revenue, because we're performing services there. All right, any other questions? All right, so letter H. Paid cash for miscellaneous expense, $2,600. So we're recording the expense. So that was a debit, and then we credit cash for the $2,600. Letter I, we paid cash to creditors on account. Okay, in letter I, we're making a payment of something that we owe as a business. So that will be accounts payable, debit, lower the liability, lower the cash because we did pay them $4,000. All right, any questions so far? All right, letter J.
I put in, well, it said paid cash to creditors on account. I wrote accounts payable at the top and cash, no wait, I wrote cash on top and accounts payable on the bottom.
Okay, so those have to be reversed because accounts payable is a liability. We're lowering the amount that we owe with the liability, or by paying it off. So the liability account, if we did our T account for accounts payable, and we had it, when we incur, remember, when we incur the debt, 2 R's, 1 R. And when we pay it off, it's just one, okay. So when we pay it off, we debit, okay? So you couldn't, if you debited or credited accounts payable, you're increasing the amount we owe instead of decreasing the amount we owe. And they said we paid a portion of the bill we owed on account. Okay? All right, letter J, paid the installment due on a note payable. A note payable exists for the company, and now we're making a payment on that. Again, we're gonna debit the liability, so we're gonna debit notes payable. And what do we credit?
Cash.
Cash. So in this time, it was $18.75. Any other questions? All right, letter K, received invoice for Blueprint services due in February. Okay, this is the month of January, so we don't have to pay this until February. So what type of an account is, what would we put that $5,500 in? We're gonna record the expense of the Blueprint. Because remember, the matching principle says record the expense when they incur or match them with the revenues, but we are not paying it, so that increases the liability, accounts payable. So that was $5,500.
I have a question.
Yes.
I used the notes receivable.
Okay, instead of accounts payable?
No, instead of blueprint.
Oh, okay. All right. Okay, think about a note receivable. Notes receivable is an asset. And that means some of our customers signed an agreement to pay us interest and what they owed us. So they're going to sign an agreement with interest, and typically that was for our services in this case. So that's different from what they're saying in K. In K, they're saying that we received an invoice, so we received a bill that we owe for the blueprints for $5,000. So it's not a customer that owes us, it's the bill that we owe. So since we owe the bill, we used accounts payable, and we record the expense, the bill that we owe, what the money we had to spend on blueprint services goes into the expense account. Is that a little better? Okay. All right, any other questions before we do L? All right, letter L. Recorded fees earned on plans delivered, payment to be received February 31st, or February, not 31st, February 31,400. All right, so our customers owe us 31,400. We have performed the service and sent the bill, but they have not paid us. So what account do we debit when customers have received their services but they've not paid us?
Accounts receivable.
Accounts receivable. What do we credit in this case? Fees earned, professional fees.
Professional fees.
Yeah, they have, I'm just using professional fees because that's the one they had listed, but fees earned would be perfectly fine. Anything that I can tell, again, that it's a revenue account. So 31,000, what, 400? All right, letter M, we paid the salary of assistants $6,000. All right, when we pay an expense like that, we're gonna debit the expense account. So salaries expense or salary expense, and we did pay for it, so we credit cash. For 6,000. And letter N, we paid gas, oil, and repairs for the automobile for $1,300. So record the expense, the automobile expense. And we used our cash, so we credit. All right, what questions do you have about the journal entries of any of those, or any questions so far? All right, so your second task in the homework was to take the journal entries and post them to the T accounts. So you go back to the transactions, create your T accounts, and post those. And I don't know how you did it, but just making the list that they had given you may be the easiest thing to do. And of course, we use use cash the most, so you want to make sure you leave plenty of space for your cash account. All right, well, I'll write those down. Anybody have any fun plans for the weekend?
College football.
Football, finally.
Young camping, Seahawks.
All right, so how many Alabama fans do we have? Oh, raise them high. You got to be proud. I mean, I'm not an Alabama fan, but you should be proud of it. Auburn. All right. What other teams? Georgia?
Colorado.
What?
Faulkner.
Faulkner. There we go. Hopefully we're all a Faulkner fan, right? And something else, probably. All right. Where are my Tennessee fans? Zach, what happened? You were my Tennessee. I was going to say you forgot. That's pretty bad. You already forgot your Tennessee fan.
In one ear out the other.
Well, I tried to forget I was a Tennessee fan for a while. It's kind of bad. All right, let's see. Okay. Got them all listed. All right, letter A. What do we debit in letter A? Cash. So letter A, we received $30,000. And what did we credit in letter A? Common stock, because our owner invested in the company, and for the stock that she invested, she gave us cash. All right, so what about letter B? $2,500 for rent. We debited rent expense. And what did we credit? Cash. Alright, so we're taking just the journal entry, putting them in their T accounts, and then we're gonna total up the new balances after we finish the posting. Alright, letter C, we purchased a used automobile. So we debited what account? Automobiles, and that was letter C, so that was 28,500. What did we credit in letter C? Cash. For 28 or 6, that's right. So the 6,000 was the amount we paid now, and then that created what type of an account? Notes payable. So we have the credit to notes payable was 22,500. All right, everybody okay with how you record these in the right accounts? In the T accounts, I mean?
Got a good idea of that.
Do what?
Got a good grasp on that.
Good, because what did you get for your new balance in cash at the end? A small number, okay. Not 30,000, right? Okay, what'd you get? Anybody want to share?
14,545.
Oh, okay, close.
I got
9,025. 9,025 is where we're going to end up. So your 14 could be just maybe one account in the wrong spot, or your lovely iPhone calculator did you wrong, because they do me wrong all the time when you're. All right, so let's finish it and make sure make sure we get all of that posted. So letter D, purchased office and computer equipment account, $8,000. So we bought the asset. So D is 8,000 debit, and we credited what account? Did we pay for it? Right, accounts payable, 8,000. Credit to accounts payable. Letter E, we paid cash for the supplies. So our supply account is here. So you should have debited supplies for 2,100, and you credited the cash account for 2,100. Yes?
So, what is accounts payable again?
Accounts payable is when we owe a bill as the corporation. And accounts receivable is when our customers owe us. So we will receive it later, or we'll pay it later. Okay? Other questions? Yes?
Is there really much of a difference between accounts payable and notes payable other than just on this, they separate?
Well, accounts payable, accounts payable is typically a short-term liability, and notes payable usually last longer. And notes payable have interest plus the bill. So in a note payable, you sign a contract saying you'll pay this amount plus interest for the extended time. So there's a signature really involved to call it a notes payable, but usually, almost always, it includes interest that you have to pay in addition to what you owe. Right? Any other questions? All right, let's see, F, the insurance. All right, we paid for the insurance, and we said that is an asset to us, so we debited prepaid insurance for 3,600, and we credited cash for 3,600.
I think you may have skipped E.
No, supplies, here's E, right here. The supplies and the
There's
cash.
E. There's E.
Yeah, I got it. Okay. Let's see. G, received cash from the client. So if the client paid us, then we debited cash. So cash came into the business instead of spending it all. And these clients, did we perform these services right now, or were they passed on account services? They're right now, so we recorded the revenue in professional fees, so letter G is 9,000 credit. All right, let's see. H, miscellaneous expense. Debited miscellaneous expense in H. And so that was for 2,600. And you credited cash for 2,600. Letter I, we paid cash to creditors on account. So we paid the creditors. So we debited accounts payable for 4,000, lowered the amount of the liability, lowered our cash by 4,000. Alright. J, we paid the installment due on note payable. Alright, when we pay off a liability, we debit that liability, so we're debiting notes payable for 1,875. And we credited what? Cash. Any questions, A through J? All right, letter K, received an invoice for those blueprint services where we have an expense, but an expense we've not yet paid. So we debited the expense account, blueprint expense for 5,500, and we credited what account? Accounts payable. We owe for this amount. We incurred a liability, so that's a credit for 5,500 to accounts payable. L, recorded fees earned, payment to be received later. So we didn't get any cash, but we've earned the amount. So what did we debit? Accounts receivable. You debit accounts receivable when you've performed the service, but the customer has not paid you. And then we credit, what was this, L? We credit 31,500 to professional fees. M and N, we're debiting the expense accounts and crediting cash. So M was the salaries. So M is a debit to salaries expense for 6,000. We paid that, so that is 6,000 coming out of our cash account, and I didn't leave much room. And then N is that automobile expense for 1,300. All right, so how do we get the balance in cash? Remember, the normal balance for an asset is a debit balance, so you start on the debit side for the assets. You take your 30,000, your 9,000, 39,000 less all these credits. And 9,025 is your balance. Did you find your difference?
Yeah.
Okay. Was it your calculator or did you post one reversed? Okay. All right. Now, the accounts receivable is an asset, but it only has one balance or one transaction. Supplies is the same way. Prepaid insurance is the same way. The automobiles, same way. We have the balances, the amount of the one transaction. Yes, Jim?
With cash, you add up the credit side and then add up the debit side and then subtract the debit from credit.
No, reverse it. Add the debit for an asset, add the debit side first, and subtract the credit side for the assets. The liabilities are the opposite, so you add the credit first and subtract the debits. Because the normal balance of an asset should be a debit. So that's gonna be what you add together and then subtract the credit. Okay. And then we'll switch it for the note payable, for instance. You have the 22,500 less the 18. So then notes payable has a balance of 20,625. So it keeps its credit balance because that's the normal balance for a liability. Remember, the normal balance for the account is the increasing side. So assets are increased with debits, that's why their normal balance is debit. Credit or liabilities are increased with credits, so their normal balance is a credit balance. All right, so what did you get? Let's see, equipment stays. What'd you get for your accounts payable balance? 8,000 plus 5,500 less 4, 9,500. Common stock doesn't have anything to do. What about professional fees? We just add those up. 9,000 plus 31,500, except that was supposed to be 400, wasn't it? I think I wrote that number down wrong. Did I write it down wrong up here? No. Wrote 4 in one place, 5 in another. 31,400 debit, 31,400 credit in professional fees. So that totals 40,400. All right, your expense accounts all had one transaction, so they have a balance of that one transaction. Yes?
I have a question about expenses. Can you put them all together?
No. Because, well, on an income statement, if it's a simplified income statement, you can lump them all together. But for the transactions, when you pay a bill, you want to keep them separated so that it's easier to go back and find if there's a problem. So if we put the blueprint expense and the insurance expense and the rent expense all together, then it's going to be much more complicated to trace something that happens. So we keep as many categories as possible of all the different types of expenses. Plus, when you get to the managerial situation, you look at your list of expenses and you have them in categories. You go, okay, maybe we spent too much on advertising, because now we know exactly how much we spent on advertising, not just a big number that this is our expenses. Does that make sense? So you can make more decisions if they're separated.
Thank you.
So when you're in doubt about an expense, like eventually they'll quit giving you the list of accounts. So there should be a hint in the transaction that says what happened with the money. So, you know, make the expense account relate to some word in the transaction. Okay, if that makes sense. So there should be some type of hint, like the blueprints. We received the invoice that we were going to have to pay because it's due later. So that's how we knew to put it in blueprint expense. You know, so there should be some type of a hint of what type it is. All right, so the reason we do this is for you to understand that it doesn't stop with the journal entry. So we write the journal entry. The journal entries are then posted to these individual accounts. And so now from these totals in these accounts, we could come up with an income statement and a balance sheet from our accounts listed here. Before you do that, you come up with an unadjusted trial balance. An unadjusted trial balance is what they mentioned in part 3, but you didn't have to do that for homework. But to come up with a trial balance is to say, list all your assets, your liabilities, your equity, your revenue, your expenses, list their balances as debits or credits, keep them separated. And then your debits should equal your credits. Because if we did all of these journal entries correct, we have debited an account and credited for this equal amounts. So to test to show you how it does match, you prepare an unadjusted trial balance. And this is for the NOS company. So this was on January the 31st, 2018. So we're gonna keep a debit column and a credit column. And we're gonna take the balances that we calculated here in the T accounts and make a list of our accounts. We start with the assets and work our way through our list. So cash had a balance of $9,025. It is a debit balance. Accounts receivable had a balance of $31,400. Supplies ended with a balance of $2,100. So all I'm doing is taking from the T account balances and putting them in a list. Prepaid. And this was prepaid insurance for $3,600. You have your automobile for $28,500. And we have our equipment for $8,000. Okay, those were the assets for our company. Then we list the liabilities next, so notes payable. Notes payable is $20,625. Accounts payable, $9,500. Those are your two liabilities. So we have assets here, liabilities here. Then we list the equity. In our equity account, we have one account, common stock. That common stock equity account that has $30,000 and it's a credit balance. Then we list our revenues and expenses. We have one. What is our revenue account for our company? What was the revenue account? Professional fees, yes. Revenue account has a credit balance of $40,400. And then we had our expenses. Each expense account has what type of balance? Is it a debit or credit balance for an expense account?
Debit.
A debit. So salary expense has $6,000. Blueprint has $5,500. Rent, $2,500. Auto, $1,300, and miscellaneous, $2,600. All right, so if you total the debit balances and the credit balances, if you have completed the double entry accounting correctly, then you should get the same balance for each. So your debits, hello, move, why is it not moving? Interesting. I want to go over there, we go, wake up. Okay, so we're gonna add all of the debit balances. You add those up and it ends up being $100,525. You add your $20,625, your $9,005, your $30,000, and your $40,004, and you also get $100,525. So our trial balance, all that tells us is that the amounts we debited are equal to the amounts we credited. But now we have a list of balances. And so when you have a list of balances, you can prepare financial statements. So from this list, we could prepare an income statement. What accounts did we say go on the income statement? Just revenues and expenses. So what was our revenue account? Professional fees. Now, do we add the revenue and expenses, or what do we do? Do we add them? Subtract them. Somebody whispered it. Less the expenses. All right, so you're going to subtract the expenses. So we've got 40,400, and on the income statement, we're going to take that revenue and then subtract all the expenses. And I'm going to cheat for time's sake and just write down the first part of it. So it's salary, blueprint. Technically, you're supposed to write the word expense, but we're running out of time. All right, so your salary expense was $6,000. Blueprints were $5,500. Rent was $2,500. Your automobile expense was $1,300, and your miscellaneous was $2,600. So we're going to subtract a total expenses. So how much is that total expense? Somebody with a fast calculator.
17,900.
All right, 17,900. I should move that over just a little bit. So 17,900. I'm going to subtract that from the revenue. So 40,400 less 17,900 gives me net income of how much? 22,500, isn't it? 22,500. Okay. All right. So once I have a list, instead of having to pull up, we pull them from the T accounts, make a list, then prepare financial statements. All right, go back in your notes to your first time we did the T accounts. This part right here. Okay, that was on the 27th when we did this. By Wednesday, on Wednesday, you're going to have a quiz. And that quiz is going to be, I will put the T account and it'll say assets. And that's all it'll say. And I'll put a T account for cash. And that's all, it will just have the T and the word cash. I'll put the liability. And it'll say accounts payable or notes payable. So what you're going to have to do is fill in the debit and credit and the increase and the decrease. Because it is very important that you learn this now. You can't do journal entries. They don't make any sense whatsoever if you don't understand that assets are increased with debits and liabilities are increased with credits, and that there are different types of equity, and the overall equity is increased with the credit, but an expense account is increased with the debit. You've got to know that. So the quiz will have T accounts with names on them, and that's all. So the T accounts, any of the accounts that we have used in the problem 2 or the exercise that we did together earlier, those accounts are subject to be on there. So like cash, accounts receivable, supplies, prepaid. It's to be successful in accounting, you've got to know that and always know that. So every chapter that we do from now on assumes that you know what accounts are assets and what debits and credits do to assets or liabilities or equity. So the faster we commit it to memory, the better you will do. So those notes, again, that was listed in the chapter. They give it to you in the chapter as well. We saw it 2 different places. The very beginning of the chapter 2, it's on page 52. Then they repeat it again on 57 and 8. Okay? Any questions about what you need to know for the quiz? All right, so that section about the T accounts that we did earlier is what you're going to need to know. All right, you also need to practice another problem, because the only way we learn this is to do it and do it and do it. So I want you to do problem 3. Okay, so problem 3 is on page 93. And you're going to write the journal entries for November. Then you'll post them to the T accounts. And then you prepare an unadjusted trial balance. So you're going to do all 3 steps. You're going to write journal entries. You're going to post, to T accounts, and then you prepare an unadjusted trial balance. So that will be for Wednesday because you get Monday off. All right, so quiz and problem 3 and it is problem 2-3A. Yes? Am I going to post what?
The 218
No.
resolution.
No. But I am going to post this video that I did for all those guys, everybody who's gone, but so you'll have that as well. So the video from class today with me talking and all these numbers on the screen will be posted, but I'm not going to post the answers because we went over it and you could have fixed yours as we went. Yes?
Are you gonna print it on Blackboard again?
Yes, you're going to turn it in on Blackboard. It's ready. It says on there problem, I think it says chapter 2 problem 9-5 for the date that it's due. So, okay. All right, any other questions? All right, hang in there, but learn those T accounts because the sooner you learn that, this gets a little bit easier, okay? All right, see y'all. Have a great weekend, and may your team win. You're not? Oh, okay.